It's been a busy couple weeks. I was getting really into my investing website and everything, and I apologize for that. I picked up a position with an investment firm. We buy offline and online businesses, and my job has been to kind of analyze those deals and to make sure the numbers look all right and whatnot. And it's kind of funny that, I'm with a couple groups, the Vetrepreneur Tribe, Drinking Bros Business, and these podcasts and Facebook groups, and everyone's trying to figure out, how to make money. So I started really thinking, I always built online businesses. I've designed them myself, and I had some issues. I wanted to start designing websites. I was I was basically having a hard time trying to figure out what I was really good at and what I wanted to do. I was always intrigued and a little intimidated by numbers growing up. Always thought, guys on Wall Street or within the stock market were the geniuses of the world, and they were the most rich, or they were the wealthiest. And unless you have money and you're good at statistics and math and finance, you just can't get into the stock market. So I really started hammering down, and it's been about 7 years that I've been doing it myself. I've been handling the wife's and I portfolio, and then I started teaching it. And then I landed this job, and now time is kind of taken away, or my time's been taken away from it. But here I am today, and I want to show you something. And I just want to show for you guys, I want to show this to you guys who are investing with other people, specifically the real estate market. I'm not talking bad about it. I'm just saying that, a lot of people are happy with 5%, 6%, maybe 7% returns, and they're letting someone else handle their money. Well, in this case, I'm going to show you how to do this yourself. I use the TD Ameritrade platform called Thinkorswim. It's a little complex, but in these next couple lessons, weeks, whatever the case may be, I'm going to be showing you all this for free and hopefully add some value in your life. I know that when I started investing, I was always looking out for people that was talking about this stuff, and I came across a guy, and finally it just all made sense. So I hope that I do this for you, and if I don't, please provide some feedback, comments. I'm on YouTube, Facebook, this video, and even on my website, investingwithchris.com. So anyways, this video is specifically to show you how to create cash flow without even owning a stock. Now, you might ask yourself, how is that true? Well, let me show you real quick, or go over a couple things. There's two types of derivatives within the stock market, and derivatives are the alternatives to buying stock and buying low and selling high. Stock options are basically the derivatives of stock that allows investors to use various types of strategies rather than a traditional buy low and sell high method, right? The options can also be thought of, let's say this, within real estate option contracts. Those who are familiar with real estate, you might know what option contracts are. Or you can think of it like the insurance agents or insurance companies and you as a consumer. Let me jump over to my... let me read this to you real quick. The intro. In this case, we'll learn how to use put selling as a method to cash flow and consistent monthly income. I'm also going to show you why to sell puts. Selling puts allow you to cash in before you even purchase a stock. It also lowers the break even or the cost basis of the shares or stock, and they're actually relatively simple to understand. So there are two types of stock options, and that is, there are calls and there are puts. You can buy calls or you can sell calls.
Powering off.
You can also buy puts or you can sell puts, right? So in this case, we're actually going to be selling premium, or what is known as selling put options. Okay, puts. When you, as a consumer in the insurance business, you buy insurance for your vehicle, and in return you get the insurance on your vehicle, and in case of an accident or whatever the case may be, and the insurance company will pay for that if you make a claim. If you're the insurance agent, you're collecting that premium every month in hopes that the risk is associated with the client or the consumer taking out a claim. With options, it's pretty much the same way, especially on the put side. If you was to buy a put for, and I just want to stress this, one option contract equals 100 shares theoretically of a stock. Okay, so just remember that and here in a little bit. So if you, as the insurance agent, was selling puts, that's because someone else had bought the put from you, or had bought the put on the other end, so that in case their stock goes down, they can sell that stock for a certain strike. Now that, or price. And what that is ultimately strike price. You have an options table, and any price that is offered is a strike price. It doesn't necessarily mean, so if I'm going to show you, I'm going to jump into my TD Ameritrade Thinkorswim platform. I'm just going to show you. We'll go up to the trade button, and I'm also going to show you this as time goes. If you have any questions, my investor club, I teach this one-on-one. I teach all this, how to read this platform. I even show you a lot of customization strategies that I use. But anyways, you'll go to your trade tab, and as you can see, you have this whole table right here. And I've typed in Amazon. I want to use Amazon for an example. It's a great stock, great growth stock. It's still booming. And you can actually make money with just a couple few strategies. And that's all the stock, or that's the only stock that you really need to use. Right here is the expiration dates and the number of days to expiration. I want to use monthly expirations because that's the peak of, there's still enough time within these options, and I'll get into this later, but 30 days to 45 days is the sweet spot, okay? So within the stock market, everything is built off statistics. There are a few things that you need to know, and that is stock options, Greeks. There's delta, gamma, theta, vega, and there's even rho, but I don't use that. Delta is two things. It's your probability of in the money. That means if we want to look at a delta of 10, it's a rough estimate. If we want to use the strike price of $17.90, that strike price in the put has a 10% chance of being in the money. As a seller, guess what? That's a 90% success rate for me. It also means that for every dollar movement of Amazon, this strike or this stock option will move up $10. Remember, this is 10 cents, but 10 cents times 100 is $10. So if it moves up to $17.91, this strike will then, or this at this strike price, this option would move up $10, and vice versa. If it was to lose or go down in strike price, it would lose $10. Theta is time decay. So for every day that goes by, it loses 36 cents or $36. As a seller, guess what? That 36 works in our favor. That means we can buy it back for $36 cheaper than what we shorted or sold it for. Okay, so remember insurance. Think of insurance on the put side. Calls are a whole other story. I'll get into that in another video. So I'm going to show you how to make roughly 5 to 6% on an annual basis if everything goes smoothly. It's in a perfect world. For this case, we want to look at, I like 10 to 20 deltas. That means everything works in my favor, either 90 to 80%. Okay, for this case, I'm going to look at least $1,000, and it says 10, but remember, this is $10 times 100. So at the 1832.5 strike price, remember Amazon right now is at 1940.79. At the 1832, we would short it or click on this column. Bid means sell, ask means buy. So it even if you hover over it, it tells you. Since we're selling options, we're going to click on that, and this will bring up the order chart or the order section, and we'll move this about midpoint. Natural means it will fill it at the lowest available. We want the higher of the two, right? So we'll click on OK, and now you'll see this pop up. This means that the max profit, this is the credit that you'll automatically take in no matter what happens, 1,027. The max loss is actually the 1,000 minus the 1832.50 at 100 shares. That's the 182,223. Now, as I said, in real estate, you can leverage and borrow to buy a house. You can borrow from the bank and you make those interest payments in your mortgage. However, in the stock market, you have to have the cash up front. You can do leverage and margin accounts, but I don't advise it, because if you lose, then you lose the value plus the percentage that you owe to your broker, and I don't advise that. So the max loss is theoretically not really a loss. It's a paper loss. You will buy or be assigned 100 shares for $182,223. Why isn't it the full 1832.50, which would be 183,000? It's because you're taking in this credit, so that's your net. Okay, so it's taking the credit that you receive and subtract it the 1,832.50. So that is your max loss, but it also, here's a tip, gives you your break-even stock prices now. So you can sell your stock for more than 1822.23 and you'll come out at a profit. If you want to sell it right away for 1822.23, you'll break even minus commission fees. So this is how you make steady, consistent income month after month. The worst case scenario is you have to be assigned 100 shares or however many contracts you do over here. This is buying -1. If it's +1, you're buying an option. So you would be assigned 100 shares, but guess what, guys? I'm here to tell you that there's also a strategy for the call side to make money once you own shares as well. You just don't have to buy your stock in hopes that it goes up. There's another strategy where you can make for sure income on the call side, and I'll tell you that later. If you just go to investingwithchris.com, provide me some feedback in the comments section, sign up to the newsletter. I teach all this. It's taken me 7 years to fine-tune my ability to be able to be efficient in the stock market and make the gains that I do. 5% to 20% are fair amounts. In this case, I'm going to show you how it adds up to 5%. So we'll go to our calculator and we'll do the 1,027 that we take in for a credit, and we'll divide that by the max loss or the potential risk that is associated with this move, and we would do that would give us a 0.005 return. Now let's say we don't get assigned the 100 shares, everything goes all right, and month after month for a whole year we do this. That would give us a 6.7% return or a 7% return if we round up on a year by basis, literally just with this one strategy. So instead of investing in with someone in the real estate market and being able to be, have your money in their hands, this is how you can control your own finances, doing this yourself and being able to invest with your own money with this platform. I jump on and I do this a few times a day, and this is how I earn one stream of income. Now, like I said, I'm with another investment firm and I've got that going on, but this right here, guys, is literally how you can control your own investing. One platform, click of a button, 1 time a day, 2 times a day, do a little bit of research, and you're about your day. So I hope this video helps. If there's anything that I can do to make it better that I didn't touch on, please provide that with some kind of feedback. If it's on Facebook, if it's on YouTube, also please subscribe to my YouTube and visit investingwithchris.com. So I hope this video helped. If there's anything that I can do, reach out, and until then, I'll see you next time.